Good morning, good evening, wherever you are. This is Steve from Waiting for Breakouts. And on a down day for the market, I think the market tanked almost 1,000 points today. Not that we really care, we're only interested in the charts. 5 days, what's happening? Ooh, big drop off. But long term, as always, things are looking pretty rosy. So, just a very quick video on stop losses today. So, this is VRCA, and this is our usual cookie cutter pivot point entry. So let's just zoom right out here. And where was it? Where was dear old VRCA? It was way up at $100, say. Anyway, so big drop down and a very long consolidation of pure nothingness for about a year. And so if we zoom in here into VRCA, so I got in here and they had a very positive earnings report, and usually trading someone acquiring some stock here, 2 mil, usually trading at around 100,000 most days. A little bit of a pop, someone knows something, right? 2 mil, someone buying $6 million worth of stock just before earnings, surprise surprise, and someone's buying 8 million, so someone's dropping 24 mil at $4 just before earnings, so someone's doing something. And then just after earnings, there was this big pop, and someone made, whatever, a cool double their money in just a few days. So what's interesting about this one is a little bit of a fake out breakout. It didn't really happen, but anyway, I got in I got in on the pullback here, which was actually quite a nice little trade. It just happened to be the perfect timing trade. I got in at the bottom of this candle. I saw it pulling back and I thought I'll get in here. So I got in here and it jumped up quite nicely. And over the course of 1, 2, 3 days, I think it went all the way up to 980. Had I been watching the market, which I don't bother doing, I could have got in at a 50% trade just in 3 days, which is absolutely brilliant. But I'm not watching the market, so it came back down and it closed out here. So I could have gotten out there a 30% trade just in a few days, which is amazing. But I didn't, and it sort of consolidated for a bit and super boring. So when I got in, I bought in, let's see, 160 shares at 668, so that would be there, yeah. So I put a 10% stop loss on, so that's 66 cents approximately, and so that stop loss would have gone in at $6. So I would have put it there, $6. And as it rises up, as it went up to here, I would have pretty much moved my stop loss straight up to break even and house money straight away, because that's a nice thing to do, because it means you can sleep worry free. You have no money in the market really. You can even sell out a percentage of your investment. You could sell out half of it and just let the other 50% run along, and then maybe it'll go up eventually. Anyway, it consolidated for a bit right along this line of, it kind of touched the 780 for a long time. So I was getting a little bit fed up with the trade, but I thought I don't want to lose my profit. So I moved my stop loss right up to 777 here. Right there. And I thought that was quite a nice place to leave it. I thought I'll leave it there, and if it comes down, I don't want it eating into my profits, right? Because there's absolutely nothing wrong with a 15% trade. I mean, it's fantastic. Just don't lose money. And lo and behold, it's come down and it dropped through that little line of support there at 777 and has continued to drop now all the way down to here. And then I see in post it's kind of popped quite a bit and it's come back up. But there was nothing to say that it was going to drop and tank all the way down back to nothingness. So it may well come back and it may well break through the highs of 887, at which point I may get back into it if it looks like promising. Tiny volume on the little bounce there, so nothing too exciting. Big sell off here. But the important thing is here to keep your money, and stop losses are so important. And The vast majority of retail traders like myself and yourself lose money over the course of a year. They all lose money. Everyone loses money. So rule number one, do not lose money. Rule number two, stop losses, and don't mess with your stop losses. Once they're in, that's it. Don't ever move them down. If it comes down, I had my stop loss here. Maybe I thought, oh, maybe it'll come back, and I'll move my stop loss just down to here. No, don't ever lose the stop. Don't ever move the stop loss. There's plenty of opportunities in the market. Don't ever move your stop losses. So I was out for a nice 15% trade. On to the next one. I may put an alert in here to let me know if it moves up above $9. I might start looking at it again, but it's dropping down, it's consolidating, it's pretty boring, it's not really doing anything. So stop losses are vital to your survival in the market. So as I say, what I do is when I enter, I put it in 10% below. I'm not prepared to lose any more than 10%. I used to have them at 20%, but I found that was too much. I'm happy for it to go down 10%, and if I get stopped out, I get stopped out. It's all about managing losses in trading. Keep your losses very small and let your winners run as high as they can. This one, it was a 40% trade. It came back down. I still made my 15. I'm happy with that. On to the next one. So don't forget stop losses. So important to your survival. Successful traders manage stop losses brilliantly. They keep their losses very small. They live to fight another day, and sometimes you get really big monster winners. So peace and love, and catch you in the next one. Keep waiting for breakouts.